It seems the global chessboard of the semiconductor industry is heating up once again, and Nvidia is right in the middle of all of it. Brace yourselves for an intriguing development that has significant implications not just for tech giants, but also for the automotive sector in Japan. In breaking news, China has waged war on Nvidia and threatened to retaliate against Japan if the latter continues to enforce US-led restrictions on chip-making equipment sales to Chinese companies. This move puts industrial giants like Toyota Motor right in the crosshairs, potentially jeopardizing their access to critical materials crucial for automotive production. But that's just the tip of the iceberg. Let's dive deeper into what promises to be a high-stakes geopolitical and economic saga brought upon all of us amidst a great AI revolution that China is fearful it will be too late to. Welcome back to Investocracy.
Now we look at the intensifying trade war between China and Japan. The US-led efforts to isolate China from cutting-edge technology has been obstructed by Beijing's warning of harsh economic retaliation against Japan. This comes after news that Tokyo will tighten its restrictions on sales and services of chip-making equipment to Chinese firms. A Bloomberg report which quotes sources showed Chinese officials pressured Japan not to align with Biden's push for Tokyo to align with new US rules. Toyota Motor expressed concern to Tokyo officials that China would restrict Japan's access to vital minerals needed for car manufacturers. A Bloomberg source said that Toyota, one of Japan's most important businesses, is heavily involved in the country's chip policy. Japanese policy makers will give serious thought to Toyota's problems. Tokyo Electron, a semiconductor gear manufacturer, is also likely to be impacted by any additional export restrictions imposed by Japan. To limit China's advancements in semiconductor technology, the United States has been exerting pressure on Japan to limit the supply of sophisticated chip-making machines to China. Senior U.S. officials and their Japanese counterparts have been meeting to figure out how to keep crucial mineral supply stable, especially as China imports export limits on gallium, germanium, and graphite last year.
In an unfolding drama that's giving the term chip on your shoulder a whole new meaning, China has issued a stern warning to Japan concerning US-led restrictions on the sale and servicing of chip-making equipment to Chinese firms. These restrictions, which have seen pressure mounting on companies like Tokyo Electron, aren't just industry whispers anymore. They are making headlines and rattling investor confidence worldwide. To put it simply, it's like a high-stakes game of poker where each player holds technology cards that could alter the global economic landscape. High-profile figures are already voicing their concerns. According to a Bloomberg report, China has expressed severe economic retaliation against Japan should Tokyo continue to push forward with these chip sale restrictions. The fear is real for Japan, with big names like Toyota reportedly cautioning officials that Beijing might retaliate by cutting off Japan's access to critical minerals. These minerals, essential for automotive production, could disrupt not just the Japanese economy, but potentially send ripples across global markets. But before we go any further, if you want to keep up with Nvidia's latest updates and anything concerning this company while keeping up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
This is some precedents in history for Toyota's worries. Following a confrontation in East China Sea in 2010, which both Japan and China claim, Beijing briefly halted rare earth supplies to Japan. And this move, it rocked Japan's electronics industry and cut off the world's supply for high-power magnets made in Japan using rare earth imported from China. Since then, Tokyo's efforts to lower its dependency on rare earth imports from China have met with limited success. The Chinese Foreign Ministry warned in a statement that it opposes efforts by any individual nation to politicize normal trade and to lure other countries to join any technology blockade against China.
This whole debacle isn't just us being theoretical here in any way. It's actually backed by real data. China, which has already been throttling its exports of gallium, germanium, and graphite, now holds significant leverage over Japan. Back in 2010, A similar situation unfolded when China temporarily suspended the exports of rare earth minerals to Japan, causing waves in the Japanese electronics industry. Analysts like Akira Minamikawa from Omdia have stressed that Japan shouldn't merely fall in line with U.S. demands. Instead, it needs to chart its own course, keeping national interests at the forefront. Especially when the United States has banned the export of more sophisticated and highly advanced computer chips, and specifically AI chips from Nvidia, keeping them away from China's ever-so-curious hands. So China obviously saw this as encroaching and restricting its progress in the worldwide AI revolution, and sought to make a change and take matters into its own hands in the form of waging war against the leader of said revolution and issuing threats left and right. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Now for a look at the state of the chip sector ahead of NVIDIA's highly anticipated earnings report later this month. Let's bring in Chris Miller, Associate Professor at Tufts Fletcher School and author of Chip War, the fight for the world's most critical technology. Chris, thanks for joining us. And I mean, we constantly go through these rounds of, U.S. government putting on export controls over some class of chips to China or others. Maybe it hits NVIDIA stock. Maybe people get concerned about the market isn't as big as we thought. And then, of course, there's some kind of response from China to try to do it themselves. Maybe just set it up in terms of what the state of play is. Is this just the world we're going to be living in for a while?
Well, we're almost 2 years into U.S. restrictions on companies like NVIDIA and their ability to sell advanced AI processors into China. And China's, of course, trying to respond to this by building their own high-end AI chips. Right now, China is still meaningfully behind, and we know this because Chinese firms are importing large volumes of the lower-end NVIDIA chips that the company still allowed to sell into China. But it's widely expected that the U.S. is going to ratchet up the restrictions at some point later this year. And we've just seen reports from the Wall Street Journal that Huawei is readying a new AI chip that's supposed to be better than the previous version and perhaps more able to compete with what NVIDIA can sell. So this is sort of a cat and mouse game. The U.S. ratchets up, China responds. And I think we should expect this to go forward far into the future.
On the other side of the Pacific, concerns are also stirring in the U.S. Representative Zoe Lofgren and Senator Alex Padilla recently noted in a letter that unilateral export controls might be jeopardizing U.S. leadership in semiconductor innovation. Their concerns highlight a broader issue: the intricate balance of national security and economic prosperity. According to Andrew Jackson from Ortis Advisors, this situation bodes poorly for companies heavily reliant on Chinese sales, suggesting investors might consider shorting stocks in entities vulnerable to these geopolitical tremors. It's not just companies that are feeling the heat. Whole industries are on edge. The automotive sector, particularly high-power magnet production critical for electric vehicles, could face significant disruptions. The U.S. and Japan are working tirelessly behind closed doors to ensure that supplies of critical minerals remain steady. But as history has shown, these negotiations are fraught with challenges. And if China keeps up the threats and continues its tactics, the tech market will probably become more unpredictable and volatile than ever. Or perhaps it could be the opportunity for some well-meaning competition to sprout from all this nonsense to keep the AI machine going further and further, as everyone in the world already predicted.
Well, the difficulty with the national security rationale is that the actual focus is AI, and AI is relevant for the civilian sector. It's also relevant for intelligence agencies and the military. And so the U.S. goal is really to make it harder for China to be a leader in AI. And I think if you look at the landscape right now, it's U.S. firms who are out in front. And you can certainly get some anecdotal evidence from China that lack of access to sufficient computing power, the type of computing power provided by chips like NVIDIA's, is a challenge to China's AI researchers and to Chinese companies that are trying to scale up. And that's exactly why they're pouring billions and billions of dollars into trying to build out their own chip-making ecosystem that can compete with companies like NVIDIA.
Do we have a sense of whether that's effective? I guess I'm trying to figure out on a practical level, what the differential is going to be. And, considering that the Chinese internet is kind of closed to the rest of the world and vice versa, I just don't know exactly what we're fighting over here.
Well, I think the U.S. realizes that China's AI ecosystem will be defined by Chinese firms. But what it wants is in the rest of the world, U.S. AI firms to have a real lead. So the U.S. can set the rules of AI around the world, and so that U.S. firms create the infrastructure that undergirds AI, not just in the United States, but in other countries too. And right now, I think that's more or less playing out. If you ask who's building the data centers that are going to train and deploy AI systems, it's largely U.S. firms, even in third countries. And I think that's what the U.S. hopes to see going forward. And by restricting Chinese firms' access to high-end chips, the U.S. is hoping to keep them behind, make them less competitive in third markets, and therefore provide an advantage for U.S. players.
So what does all this mean for you, the investor? At this moment, Toyota and similar companies find themselves in precarious positions, with potential access to essential materials hanging in the balance. However, where there is uncertainty, there is also opportunity. Those who keep a keen eye on these developments stand to make well-informed investment decisions. If the geopolitical chessboard aligns favorably, Toyota could rise stronger, backed by diversified supply chains and innovative technologies. Currently, the stock position of Toyota and affected tech firms presents both risks and rewards. Short-term volatility might scare some investors away, but for those willing to weather the storm, the long-term potential remains promising. Analysts suggest that Toyota, if it navigates these murky waters successfully, could see a surge in stock value, propelled by global demand for automobiles and its steady pivot towards electric vehicles. What's your take on this thrilling saga? Do you see China's threats as mere bluffs, or do you think they will drastically impact the global semiconductor and automotive industries? Share your thoughts below, and join the conversation as we decode one of the most exciting economic stories of our time. And finally, if you would like to know what companies like Nvidia have been up to these past few days or what threats are looming in their vicinity, go ahead and click on the next video on your screen.